The statement of cash flow and its correlation to tennis. Questions such as, what will future cash flow be? How is management doing? Can debts be paid? Are all answered thanks to the statement of cash flow. This focuses on the aspect of cash inflows and cash outflows. It only affects cash. Our forehand, cash inflows, where the cash increased, such as cash receipts coming into the company. Our backhand, cash outflows, where the cash was spent, cash payments going out of the company. These are two of the ways to hit forehand or for the company, inflows, and backhand, out of the company, or outflows. There are 3 activities of cash flow, and each has its own section in the statement: operating activities, investing activities, and financing activities. We will use the player as our example of operating activities. This is the first section. How you hit affects current assets and liabilities, the day-to-day operations. We will use the racket as the example of our investing activities. This is the second section. How you hit increases and decreases long-term assets. Example of these are property, plant, equipment, notes receivable, and investments. Now we will use the ball as the example of the financing activities. The final section. This increases and decreases long-term liabilities and equity. Examples of this is stock, paying dividends, and treasury stock. Non-cash investing and financing activities. Purchases made without cash not included in cash flow, and they are a separate schedule on the bottom or in the notes. There are 2 methods, direct and indirect. The most common is the indirect method. Using this method, you need the income statement for the current year, the balance statement from the current and last year's, along with reviewing transactions. If you do not have these or you lose them, it will be chaos. You will lose control. If any of our trajections, or maybe even all, in our activities are wrong or underestimated cash, it will result in hitting into the net, or serving into the net. This means a wrong calculation, too low. If one or more of these activities is overestimated, it will fly out of bounds. Too much cash inflows. We must always work to correct these and hit it into bounds. Keeping the right records is a necessary aspect of keeping track of your cash, where it comes from, where it goes. When all of the cash inflows and outflows in each activity are calculated correctly, you will perfectly hit into the box, a perfect serve, ready to continue playing. In order to continue playing, it is necessary to keep track of your inflows and your outflows to make sure that while you still hit the ball, it is still going to go to the right spot. When you keep track of each activity, operating, financing, and investing, or the player, the ball, and the racket, they will work together, and with just a bit of focus, they will stay collectively together and in the correct way. When you spend and receive money, it is like a volley, back and forth. This never ends, the spending of money and the receiving of money, a continual sport. When each of your operating activities, investing activities, and financing activities are all calculated correctly, they will flow and make the statement of cash flow correctly. Just like this, if the player is in the right position, the racket is in its right position, and the ball is in its right position. It will all work correctly, and the game will continue to play smoothly without going out.